Q2 quarterly webinar, the retail rundown, insights on Q2 performance, the consumer and retail strategies. Needless to say, it's been a very active retail quarter. We're closing in on the end of Q2. There's still obviously a lot of learnings around consumer behavior and the impact it's been driven by tariffs. So we have a very exciting webinar today planned. We have RJ from Placer.ai. Placer.ai is a leading provider of traffic analytics. RJ heads the analytical research there. And of course, we have our CEO and founder, Deborah Weinswig. We have a jam-packed session. We're going to discuss and review where we are in Q2 in terms of retail trends, consumer behavior, and the shifts that we're seeing in the market, as well as a state of the malls, what we're seeing from type A, B, and the tenant mix. And then we'll also pivot to a Q3 and 2025 outlook as we look to set strategies for the rest of the year to drive retail success. So, as always, encourage everyone to engage and interact. There is the function at the bottom of the screen there, the chat function. And with that, I will pass it over to RJ.
Yeah, thanks, Stephen, and thanks everyone for joining us today. As Stephen mentioned, I think this has been one of the more interesting quarters that we've been through in many years for the retail and broader consumer environment. Hopefully, you'll get something out of this. It's, I think, timely, given that we're kind of in the midst of the first quarter retail earnings reporting period. I know a lot of the teams here have just come back from major conferences. The Coresight and Placer teams were at the International Council of Shopping Centers event earlier this week. We were also at the National Restaurant Association show. A lot of insight coming out of those things. So we're happy and excited to share some, not only what the data says, but also some of the things we're hearing with you today. So as a brief reminder of what we're going to talk about, Stephen mentioned this, but we're going to go through a quick agenda, then go through some broader retail trends. Consumer behavioral shifts, I think, has been one of the more interesting things that we've seen this particular quarter because there has been definitive shifts in behavior. So we'll go through some of that, talk about the mall because I think we're seeing some interesting developments there. And then, as always, we'll save time for Q&A. Brief introduction on what Placer AI is for those who aren't familiar and those who have not seen us before. We're a location-based analytics company powered by foot traffic, by mobile data. Essentially, that means we can come up with foot traffic data for any physical place in the United States, whether that's an individual retail store, shopping mall, convention center, downtown area, effectively anything you can draw a shape around on a map, we can get foot traffic data for. And it works, the way it works is we partner with, several dozen mobile app companies. And through those app partnerships, we get 24/7 data on a panel of about 25 million devices at this point. From that sample, we take the latest in machine learning and AI and extrapolate that sample size to the full location, get you the full number of people coming in. I like to think of our data as the what, how many people are coming in, how long they stay, where else they shop. And through some of our other third-party data sets that we layer on top of it, we can then unlock the why and the how. We can get demographic and psychographic data, but importantly, do it in a way that doesn't infringe on consumer privacy. We don't collect any personal information. All we know is that a device has gone into a certain location. We rely on some of these other third-party data sets to come up with estimates for that persona and how that may be changing. If you haven't seen us before, check us out at Placer AI. We've got a lot of free tools, a lot of free content. We'd love to talk to you if you haven't seen us before. But with that, we've got a packed agenda. We should jump right into the fun stuff here, talk about retail trends. And I think just as a baseline, let's start just by talking about what's going on. And I think it's been interesting. So we had a pretty good start to the year. January was actually relatively strong, saw some year-over-year growth, largely because we were lapping storms in the year ago. But then February hit. Actually, late January hit, and then February hit. And my team usually fields, let's call it anywhere between 5 and 10 calls from senior leadership teams across the retail and consumer space in a given week. And all of a sudden, that jumped to like 40 or 50 in February. All of a sudden, we saw a big decrease in visitation trends. And you can see that on this chart here. This is a baseline chart showing back to January 2020. But if you look at kind of the February numbers, we were way below where we were last year. I think there's any number of factors. It really was a perfect storm month. We had a lot of uncertainty dealing with tariffs. We had the threat of inflation. Egg price inflation was starting to take over the headlines. We had weather issues. We had discussions about immigration headlines. We had discussions about government restructuring, consumer boycotts. It really was the kitchen sink. And so I think to see where we went in February. We did see a little bit of recovery in March and April, but generally speaking, we are trending below where we were for much of the retail category. A little bit improvement in March and April, but it's been a tough go of it. It's been an interesting year. Some of the trends we talked about, just mentioned that I think are going to continue to weigh on consumer behavior and sentiment for the months ahead. Some of those may dissipate a bit too. But Deborah, kind of state of the retail union right now. What's your take overall? Based on what we saw so far year to date.
I mean, I think there's bigger issues where we're just seeing the leadership of so many of these companies. I mean, I have to say, I've covered the industry for 2 decades. I mean, stuff that literally is truly awe-inspiring with changes in leadership at Kohl's and Kroger. And I don't even, I was on CNBC talking about Target and some of the challenges they face in supply chain. And I mean, and I was just calling them out as probably, they could benefit from private label, but they've got real supply chain issues. And it's so much worse than I ever thought it could be for them. And so,
Yeah.
and you've got like Family Dollar and Dollar Tree, and right, the Dollar Tree team and Family Dollar team like are coming back. I mean, it literally is of almost like biblical proportions. And then at ICSC, it was like all restaurants. I don't know why you went to NRA. You could have just gone to ICSC. But I'm telling you, literally the timing of this call is, and like, was at like ULI also, but like the restaurant stuff, I mean, that to me, I will tell you, right, and our biggest change of Coresight at the beginning of the pandemic, we had really been, kind of very big in like tech, real estate, and retail, and we started to do a lot in CPG. And I would say like last 12, 18 months, it's like restaurants, hospitality, some of it's mixed use, right? But there's just something more that's happening. And I think I'd love your take from, on the restaurant side, but a lot of it feels like it's Gen Z driven as well.
I think there's a lot of truth to everything you just said there. That's a
This is why I love you.
lot to unpack on that one, but there's a lot of truth to that. And one of the things that we're seeing is kind of this idea, and then we'll talk about this a bit more later in the presentation, but kind of this lack of the third place right now. We're still coming out of the pandemic a bit. People just don't have that one place where they can go and congregate and sense of community. In the past that used to be kind of your local Starbucks. But with people going to the office less, and they have some of their own visit frequency issues, which they've discussed in the past and trying to improve. Basically, that's left us with kind of where is this one place that we can hang out with our friends and family outside of the office and home at this point. In a lot of ways, the mixed use strategy that we've seen a lot of these companies deploy, whether that's adding apartments, adding co-working spaces, adding more entertainment or attraction features to malls, in a lot of ways, malls have started to recapture that third place momentum. It's actually interesting that they're actually outpacing in a lot of cases retail. But with that too, we've also seen that that does lead to more restaurant interest too. We've been getting a lot of questions from our commercial real estate customers on what is the right percentage of dining mix at our location. What are the right tenants we want? Do we want a national chain, or do we want something a little bit more local that kind of shows and can help to shape the image of that brand right now? I do think some of that is demographic driven, but I do feel like much like we saw during the pandemic right now, where that accelerated a lot of changes that were already taking place, we might be starting to see that again. We might be
It,
starting to see with this uncertainty, people are like, wait a minute, we need to make some changes and make it happen. We can't sit on the sidelines anymore.
I know we don't have, because I did sneak peek on the slides, but we've talked often on these calls about the gym or,
Hmm.
gym memberships and, traffic. So I would say from some of our survey work, we are seeing consumers, and obviously there's, that's a certain demographic as well, but that they are using that as like their third place, if you will. And so what we're seeing is like, but it all goes back to restaurants. Right, because we're starting to hear from some of the, let's just say some of the gyms that we consult with, right? They're starting to think differently about how they can right, how they can get people to dwell more, right? Because they'll spend more, whether it's on, you know, different kind of apparel, footwear, accessories, or whether it's, kind of, other things that they need for their gym routine. But it's really interesting to me. I think this third place idea is a really big one, RJ. Of
I do.
course, and I think you're like how you're thinking about it and how that's really changing things in maybe unexpected or unprecedented ways. I just think it's a fantastic theme.
Yeah, I think it's one that we're going to be talking a lot more as the year progresses. I think we're starting to see real evidence of that importance of the third place, the ripple effect that it has not only on, maybe existing malls and their tenants, but also neighboring areas. Just that overall market itself, the trade area, I think it's having a lot of impact. But to get us back on course here, one of the things that has been obviously hard to avoid is discussion about tariffs. And I think this has been so interesting because at the end of the day, I mean, really, we haven't seen a lot of changes because of it. There's not really been much price increases. Obviously, Walmart talked about the fact that they would start to raise prices if things continued as they were. But just even the threat of tariffs has been so significant. And what we see with our data is that consumers are hyper aware of tariffs. They're watching the news, they're keeping tabs on things. If there's any potential risk of them having to pay a higher price because they missed the tariff implementation date, they're not going to. They're going to be in the stores looking at it. So this I thought was fascinating, looking at kind of the year over year trends, and you kind of see, generally speaking, dollar and discount stores. Not surprising, value continues to be a very big theme. But we start to see some categories that were maybe subject to the reciprocal tariffs, or at least expected to. Beginning of April when the tariffs were supposed to go into place, home improvement, electronics. We saw a big spike in visitation. We saw a big spike in warehouse clubs, potentially as people were looking to stock up. I mean, I think if anything else, I mean, it just shows you after 2 years of inflation, consumers are extremely hyper aware of potential raising prices, and if they can get ahead of that, they are going to. And so I think that's going to continue to be a theme, is that higher prices are going to be a very big motivating factor, and not a shock there, but it's just amazing how quickly consumers can sense that, how quickly they're monitoring these things. And we saw a couple of restaurant chains actually announce egg surcharges back in February, and they got hit almost immediately. I don't think we're going to see a lot of announcements out there on price increases. It may happen a little bit more subtly, but it's a motivating factor, certainly right now.
So I'm going to take the other side of that. So number one, spending time at both FMI and NACDS, we heard across grocery, CPG, drug, they can't raise prices, right?
Yep.
So that would take a lot of this slide and like, verify the data. We are hearing in, let's just say, higher priced items in apparel. We've actually heard a lot in like I guess outside of, calling them kind of, child and baby, but more the hard lines for those, right? And those are things that you can, if you think about it, right? There's a certain point your child does get larger, and so they need things for bigger children. So, and we are hearing and seeing in our data that there are price increases, but not in like the daily items and not in, I would say some of the smaller ticket home improvements. So it is starting to, I think, weigh on people, but it's more that, and I think you've got, right, like people are visiting more locations, right, to just check price more.
Yep.
And there's a lot more forums on it. I've always been I don't know, it's always one of the things I've always been so interested in. I'm like, it's just as interesting and fascinating as this industry is, it's just gotten so much more so this year. So it can be exhausting for some, but I think it's interesting to see the impact for different industries, and hence, right, you start to think about retail media and some other trends, right, to try and, like,
Yep.
if you will, cushion these EBIT margins.
Yeah, it's interesting because I mean we've talked about this in past webinars as well. The idea that coming out of the big inflation spikes that we saw in late 22, in 2023 and 24, people started shopping a wider number of locations than ever before as they were kind of looking for those lower prices. Really what we saw was consumers rebuilt their entire food retail routine. And what was interesting is kind of starting this year, people weren't really letting new retailers into that routine. I maybe added Aldi, I maybe added Trader Joe's to my mix. I'm going to there, but now I'm content with my group. It does feel like that all of a sudden is starting to shift again, and people are starting to add, and kind of to your point, let's go out and try some new locations because of prices there. So it's been interesting to look at, what kind of motivates people right now. The other thing too is, certainly value is very much front and center. People are looking for low prices, but I think they're also looking for differentiation right now. And it's kind of funny to your point. a lot of groups cannot raise prices right now. CPGs, I think, in that boat. A lot of the restaurant chains I talk to are a little bit reluctant to do it. They're probably going to need to at some point, but they don't want to because people are really hyper aware. We probably won't see the same $5 bundled meals that we saw across the quick service restaurant space. But what's really interesting is kind of the marketing plans and kind of what's driving people in. And it's kind of more differentiated products. And we see this with the data. So what we're showing on this one is year-over-year trends to a bunch of different or grocery categories. So your traditional grocers like an Albertsons or a Kroger. You've got value grocer, which is your Aldi, your Lidl's, grocery outlet, ethnic grocers, kind of superior grocers, Northgate Gonzalez, and fresh format, which are your Whole Foods and the fresh
Well,
market.
look at Sprouts. Look at the
Yeah,
growth
Sprouts
rate
is
of
another one.
Sprouts. I mean, that to me, I mean, going back to, I think ethnic grocery, I think the demand is way ahead of supply.
Yeah.
And so to me, if I were to think of anything where there's, I think, a lot of growth, physically it's there. But what's so interesting with Sprouts, right, is that you have, first of all, very, like you said, very differentiated product, but also at a not whole paycheck price. And so that I think it's really interesting to see going back to, right, that's why the time of this, right, what's really working with the consumer right now. And right, I think that's a pretty good, kind of purview. Once again, assuming management, ceteris paribus stays the same, because I have to say with that, right, like all bets are off. But
No, that's fair. That's fair. And I think you're right. I mean, I do think that's the defining factor. If we go look back at the success stories across retail, across restaurants, it's those chains that have been able to, combine competitive pricing. It doesn't always have to be the lowest price, but it's got to be competitive with uniqueness. I mean,
yeah,
that's the Aldi, the Trader Joe's, some of the ethnic groceries, and you're spot on with the ethnic groceries. It's different products that you can't get anywhere else. It's authentic products, but it's also pretty price competitive too. It's something that
very.
you don't break the bank on too. And I think that's been really kind of the key to the success. And I think we're continuing to see more and more of that, especially with a lot of retailers kind of handcuffed in terms of what they can do with pricing. It really is going to be about all the product, and it's going to be a lot more marketing on the product themselves, a lot of differentiation. I think that's going to be the key to it.
Well, but
Um,
think about the opportunity, right? If you go back, let's call it 5+ years ago, right? Albertsons, Kroger, Safeway, right? They really dominated. And
yeah.
you look at the landscape now, I mean, it's quite sad, actually. I think I actually kind of feel it. Like it's sad what's happened. And and Walmart has, turned itself into this tech company that, you know, is truly changing the way they work with like local communities
Mhm.
and the way that they work with their employees, how they're educating people, what they're doing with Gen AI. I mean, it's really kind of unbelievable. And I think, you're seeing some really interesting data across the board.
Yeah, I think we are. And I think you're exactly right. Just kind of the stalwarts in this category have either repositioned themselves or found themselves in a disadvantage at this point too. It's a quickly moving space in retail right now, and just the developments we've seen even just this year alone, typically would be kind of stretched out over multiple years, and yet we've seen it condensed in kind of a couple months here. And so I think we have to really see some agile retailers on that front. What we're showing on this slide is just year-over-year trends for the superstores versus the warehouse clubs. Anyone paying attention to the earnings news the last couple of days should not be surprised by any of this. We've seen strength out of the warehouse clubs. Those were generally strong performers. And again, it speaks to this, we've got innovative merchandise, but at really low prices. I think that's kind of been, oversimplifying, the key to their success. Obviously, there's a lot more to it. But what it is really interesting about that is it's not just, kind of your traditional, customer there. They've started bringing in that, younger millennial, that Gen Z customer, that's really been the source of growth for a lot of these warehouse clubs right now, and kind of speaks to what's kind of driving and what's moving the needle right now. Superstores, admittedly, there's some, store closures a little bit on that too. But I don't think it's a surprise to see that, Target numbers being down year over year. They talked about the physical stores and the decrease in transactions there this week. So not a surprise here, but this is kind of interesting to
But
see, kind of the dichotomy between clubs and the superstores right now.
but I think the challenge for me and I think for investors with Target, right, is that first it was, they've cried wolf a few too many times, right? So first it was around shrink, and now
Hmm.
it's around tariffs, and they are literally the only ones in the industry, right, who are basically blaming their performance on exogenous factors, where I think that, they need to look a bit inward. And so it you look at like a Costco, right, which has right like added a whole innovation team, and I think they're just getting started despite kind of where they are. And that's really interesting. So I think if you start to look across the landscape, it'll be interesting, I think, in 4Q to see where we're at and kind of where there's like more separation, because I think it's going to get increasingly interesting.
Yeah, I think you're right. I think it's going to be interesting to kind of see it play out. And I do think you're right that the ones that had spent the last couple of years really investing behind a lot of these things, whether it's the tech, whether it's kind of the supply chain to make sure it's more nimble. Yeah, obviously, Walmart with the marketplace continues to see success on that front. It is going to be interesting to see, those ones, that have been kind of benefiting from the investment cycle that they've had the last couple of years, if that continues to play out, or if some of these chains can play catch up here. This has been another one that's been kind of fun to watch. You hinted at apparel, and this has been a category that's been really interesting because, I think we talked about it the last time we got together, but, apparel actually had a fairly strong 24 holiday. Some of that was this idea that people were, changing their look and feel. Some of that maybe GLP-1 related, some of that just maybe just wanting a lifestyle change. And so with that comes a new wardrobe, and that's really helped to drive a lot of growth. And generally speaking, I mean, if we look across, certain apparel retail categories, continue to see some strength there. Off price, not a surprise based on the numbers that we saw from TJX. Some really good numbers. Continues to be this idea, and again, it kind of this idea of competitive pricing but unique products. That treasure hunt aspect that TJX brings to the market is extremely been a powerful motivator for consumers right now. But we've seen other categories hold up well. Luxury department stores doing okay. I don't think that's all tariff related. I don't think that's people trying to get in. That's much more. That's some innovative products, some new things on that front. Even some of the general apparel retailers, Gap's had a couple moments of strength there as well. So it's an interesting time for the apparel retail category, and it's again kind of some groups that are kind of doing things ahead of the curve. Some others that maybe haven't quite invested as much. Kind of reminds me of kind of the what we just talked about the mass merchants as well.
Yeah, I mean, it's interesting because there's a lot that you can kind of port over from what was said on grocery, right? Where,
Yeah.
I think with luxury and then with some of the, right, like Gap and American Eagle, I think, collabs and just, having differentiated, unique product, right? Limited time, limited quantity, limited offer. And so these numbers make more sense when you start to kind of like look at them through that lens. And yeah, I think that this is a category where there's been a lot of right kind of calling for it's got to be over, right? Like this apparel cycle's got to be over. I keep thinking and I'm like, it just doesn't like, it doesn't feel that way, right? When you're in board
No.
meetings, but not it doesn't feel that way. And there's just something more happening, right? I mean, it used to be right. There's been a lot of kind of, I think, different ways to explain it, but right, we are seeing more units purchased per person,
Hmm.
and that is not changing, right, despite the fact that we also have this huge circular economy. So it's fascinating to me, and I think this is really one of those to watch.
Yeah, I think it's interesting because I mean, you think about fashion cycles and how long those usually play out, kind of the 5 to 7 years, or it feels like that's kind of been truncated in terms of fashion cycle, but it is almost more circular. The cycles happen quicker in between. It's kind of interesting, kind of see that play out a little bit too. And you're right. You said I think there's a number of factors behind like this slide. There's probably like legitimately like 10 plus different trends underlying these different things going on right now, whether that's kind of broad macro consumer behavior, company specific things going on. Yeah, I agree with you. I don't think the apparel cycle is done. I think we're going to continue to see strength in this category for a number of reasons as we kind of go throughout the year here. So it'll be interesting to see. It'll be great to check up on this one as we go through the Q3 update here.
So we're gonna take a bit of a break because we've got almost 2 dozen questions in the queue. So
Sure.
we're not gonna get through them all, but
Yeah,
I
I'd love
will.
to take some questions here.
Great. So we'll start at the top, because why not? What are some good behaviors to convert traffic into paying customers? Great question.
Oh God, that's a fantastic question because you're right. We are seeing people visit more often, more stores than ever before, but that conversion is becoming more elusive. So I think that's one that has been a challenge for a lot of retailers. How do we get that person who's coming in actually there? And Some of it's going to be, I think, just the merchandising side. I think that unique product that they can't get anywhere else, I think is going to be huge. I think this idea that, oh, I was the first one to find this product, I think has been a big motivating factor. People see that unique product that maybe they can't get it. To your point, the collaboration product that if I don't buy it now, it's potentially not going to be there the next time I come in. I need to make this purchase now. Maybe it's that new flavor or that new product. Maybe it's a new spin on a old favorite that we're seeing kind of this nostalgia play for a lot of, particularly in food retail. I think that can be a motivating factor and kind of get that person over across the line. I do think merchandising, I do think a bit of kind of promotional activity, can get people there as well. But I do think when it comes down to it, the product itself is the best way to convert that visitor to the store.
I also think that the associates have, they're armed with more information, and they're like, what we've heard and when survey results reveal is that consumers are more satisfied with their in-store visits as well, because
Mhm.
they feel that they're getting access to information that they can't just look up themselves. And so I think that's pretty much across retail. And so I think that's right there, like you said, there's many things contributing to some of the traffic. But I think that, obviously a lot of this is through different technologies, but the idea that the consumer is having a better experience is, I mean, it doesn't get better than that.
And I think you hit on a key point there. I mean, one of the secrets to success in retail for forever has been basically hiring your customers as your associates that can really be, enhance that overall experience. And there's been so much talked about technology kind of, augmenting the overall customer experience when they go into a retail location. And I think there are some elements of that too. But at the end of the day, I think the technologies that empower your associates are the ones that are really moving the needle, the ones that can make them smarter about the product. I think, the Tractor Supply and what they've been able to come up with the AI for particularly what is a specialized product. I think that's still one of the more innovative stories in terms of, really empowering your associates to kind of make that experience better, powered with better information. I think that's where really we're going to see a lot of, potential developments this year and how to keep that customer coming back, improve visit frequency through better information, through that engagement that the associates can offer.
No, I agree with you. All right, this question is from Philip. Does the long trend in shift to experience over goods for discretionary spend suggest that a growing proportion of the population is coming to a realization that they have enough stuff?
That's a good question, and probably one that we need to do a little bit deeper dive with our data on that one too. Um, yeah, I don't know if that's ever the case. I don't think, at least with U.S. Consumers, they've ever quite reached that point of having enough stuff. But I do think that some of the behavioral aspects that we see with, particularly kind of the last couple of years of inflation, that certainly has made consumers a lot more selective and looking to stretch their budgets. And what they prioritize has certainly changed a bit more. Certainly that focus on holidays and events has been an interesting one that's continued into this year. So I don't know if we're quite at that point yet. I think that certainly we see cycles and people pull back on discretionary purchases during periods of economic uncertainty, and I think we're certainly at that. But it'll be interesting to see how that plays out. And some of the categories we've been talked about in discretionary too. I mean, there's some things going on there too. I mean, there's big shifts in the consumer electronics category in terms of hardware to software, things like that. So there's some structural changes too, and I think that's one of those things that you have to go back and look at. What categories have structurally changed coming out of the pandemic, which ones are just going through cyclical or pull forward in demand. So I think that it's a good question to ask, and I think there's it's probably a case by case answer on each one of these categories.
Perfect. Any types of trends in retail, labor, staffing, and how retailers are dealing with challenges?
Yeah, that's ask anybody in retail and restaurants, and certainly heard a lot of it the last couple of days at the events that we were at. Labor remains a challenge. Not only cost of labor, but labor availability and keeping people happy and labor retention. Really, kind of all angles of it all. We've seen more and more the case where people, if you cut back too far on labor, I mean, we talked about just the idea that that store experience is kind of dependent on that associate. You can't fully replace that with AI and other technologies out there. That's a big part of it. And if you cut too deep, it can really dilute that overall consumer experience. And I think some of the retailers that have been more pressured as of late maybe have cut too deep on that front. These kind of 15,000, 17,000 square foot stores that only have three associates working the whole store at this point. That's really hard to do because that customer who needs that assistance, can really disrupt the whole flow of everybody else in the stores. So I do think it's one that, in terms of staffing at a lot of these stores, and we do occasionally look at kind of visits by employees based on dwell time at these locations. And it does feel like we're kind of at a point where retailers maybe need to rethink that, maybe make an investment in some of the store level associates here as well.
Yeah, I mean, it was really interesting at our Next Gen conference in 24. We had a panel with two restaurant owners and another service provider, I think one of the owners of Supercuts. And so I think between the three of them, they probably had, 4 or 5 thousand locations. And the level of detail that they were already using Gen AI for staffing was fast. It was like one of those things that like it was so interesting and I hadn't heard it from anyone else. And they were talking about, right, with restaurants, it could be like a rainy day, people aren't going out, and they're like immediately, so their employees are happier, they were seeing less churn. And
Yep.
and those were some of the things. And they said then on days like let's say it's really hot out and maybe it's a bar or whatnot, that they were doing a much better job of having, being able to attract employees to pick up additional shifts because they treated them so well on the other side. So it was really quite interesting. And I think we're still, kind of quite early in that.
We are, and I think that that's where some of the more interesting technology innovations are coming out to kind of better manage that labor staffing and be a little bit more dynamic and a little bit more hybrid model on that too. And that, forecasting or predicting kind of, spikes in demand and getting ahead of that to make sure that experience is there. I mean, some of the most successful players, not only in retail, but in the restaurant space. I mean, Brett Schulman from Kava is one of the good examples where he's told me that, anytime they cut back on labor at the stores is when their actual sales results get hit, and keep maintaining that level of labor in the stores just to kind of keep that throughput at the level, that consistency of experience is just absolute critical to the success and really anything in the consumer space right now. So it'll be interesting to see it play out. But I do think some of the new technologies, and this is where I think AI can really have a meaningful impact, if you're able to better predict kind of what kind of level demand and visits you're going to have at your store, that makes for a better experience going forward.
And someone asked if we can go back and revisit the grocery slide.
Yeah,
So if we could do that,
there we
great.
go.
So I think, this where in the Q&A, there seems to just be a lot of interest here, I think, in terms of what's happening and when, and, kind of who the winners are. And I mean, if you look, right, and can you, actually, I think RJ, one of the other questions was what's in fresh format grocery?
Yeah, so fresh format groceries are going to be your natural and organic. So this is going to be your Whole Foods. This is going to be Sprouts. This is going to be the Fresh Market. Natural grocers is in there as well. It's a lot of some of the regional players too. I don't have the full list in front of me, but there's a good mix of good chains in this one.
And so as you think about, right, these different types of formats, because obviously the fresh format has really just had a unbelievable year in 25. Is there anything that you're seeing specifically that they're doing? Is it more units? Is it, kind of continuing to have a more dynamic offering? What are you seeing from that perspective?
Yeah, I think it is a little bit of kind of product mix shift. It has been some new products. There's been some vendor turnover in terms of what they're bringing into some of these locations. In a lot of cases too. I mean, I think Sprouts is a perfect example of this, where maybe we don't need the same size store that we had. Maybe we shrink the size of the store, and we really focus in on that loyal customer. We don't need, we have this really loyal customer, this foodie customer that's always coming in. That is something that we know we've got a lot of traction with. So now it's a matter of kind of keeping them happy. These other groups that are kind of more the occasional, we want them coming in, but it's less emphasis on them, and we really want to focus on our core customer. I think that's been really one of the secrets to success is kind of, hey, let's really focus on not only our customers but also the product mix that really drives the repeat visits from this group. And I think that's been kind of the secret to unlocking, a lot higher visit frequency. And again, it's not really unit growth that's driving a lot of that. That is, kind of more comparable visits. That's incremental visits from existing customers that's driving a lot of the growth right now.
Yeah, the other thing that's interesting, I just, there's, I mean, like I said, there are 2 dozen questions, so I'm going to try and at least touch on most of them. But there, a lot of folks asked about GLP-1, right? Not only from an apparel perspective, but also, how did we think about how that related to either on the grocery side or on the kind of super centers clubs?
Yeah, I think that it's certainly a positive. I mean, with the GLP-1s that, and I think they've had an impact. I think it's pretty fair to say there's enough data points, whether it be, what we see in terms of apparel, what we see in terms of fitness, which, a lot of people is, oh, wouldn't that hurt fitness? But it actually, when people have lost weight through GLP-1, they generally want to keep that weight off. And so that I think has been a positive in terms of fitness club memberships. I think it has started to change the way people eat, and certainly some people picking up healthier eating habits, and I think some of that's showing up in the fresh format stores as well. So I think that there are some things that we can see with that. So I think that there's been some definitive behavioral shifts with GLP-1s and some just general focus on kind of this year of reinvention that we've talked about in the past that I think is kind of continuing to play out, even though with some more noise with tariffs and other things.
So 2 other really excellent questions. So one I'm going to take. So any insights on the footwear manufacturers' delivery issues? If I were to tell you the amount of time that we've spent on this, it is, talk about interesting in terms of an industry that is facing really unprecedented challenges. And, for those, I have a deep background in supply chain. If you think about footwear, there's a lot of tooling that's needed. So to move that quickly is not can't really happen. And so the footwear manufacturers were very, I would say, very thoughtful in how they've been approaching the current environment. And so a lot of them have manufactured product, it's sitting in bonded warehouses and free trade zones, et cetera. And they're kind of taking a bit of a wait and see approach. Others have been, kind of moving product, but once again, because it takes so much time to set up the tooling, that that is leading to a lot of these kind of delivery issues. And so some of what we're seeing is, this idea, product that's been, I actually personally believe on footwear specifically, this is and the data was suggested as well, this is helping the clubs and the, kind of off-pricers, right? And so you've got product that's kind of being taken out of pack away or pulled from other seasons. I don't know if there's anything else you've heard on that side, RJ, but it's been just such an interesting and dynamic and difficult situation.
It has been, and it's one of those things that, our data isn't just exclusive for retail locations and shopping malls too. We do look at port data, we do look at manufacturing facilities, at least in the United States. And what you said is pretty consistent with what we've seen in terms of port activity, that port activity and, where the next inbound shipment goes. It pretty clear that we see some pressure on footwear retailers there as well. So I think that's pretty consistent with what we've seen in our flower data as well.
And then I'm gonna let you take this one because it's a difficult one and it's a industry that
Thanks.
I've
Appreciate that.
very near and dear to my heart. How do traditional department stores fit into 2025? Thank you, Richard. That's a great question.
Yeah, it is. It's one that every year it's that same question we get. How does traditional grocery or department stores fit into the overall mix? And I think the answer is don't be traditional. I mean, I think that evolving and kind of changing what you do and kind of that overall experience. I mean, it can be a number of things, and we've seen some success actually from some of the players in there. It might be a change of vendors. You may be shifting out some of the older vendors and maybe bringing in some new blood on that front. I think there's been some really interesting developments in terms of the overall mix on that. Maybe it's the look and feel of the stores themselves. certainly bringing in more experiential aspects to it, which I know we've talked about in the past. Ways to almost becoming that third place. I think, kind of tying it back to what we talked about initially. I think a lot of the brands had kind of forgot about this idea that they really should be kind of a third place in a way for visitors, consumers to have kind of this shared experience here. And so some of the smaller formats that we've seen a lot of the department stores, they're anything but traditional. They look very different from the legacy stores, and I think that's kind of been one of the exciting things. There's a lot of room for reinvention in this category, and I think some of the ones that have been kind of pacing ahead are doing that.
Have you been to the newish Le Printemps in downtown New York?
I have not yet, so I'm gonna have to rely
So
on you. I've not had a chance to visit it
I,
myself yet.
I will say I had a very special tour, and it was so amazing. So right there's these concierges, and we got like a private tour, and they were like, we don't want you to buy anything, nothing. We just
Hmm.
want you to come. I'm like, so can I bring like my laptop and just have a cup of coffee all day? They're like, that's what we want, right? We just want you to come and be happy, right? Very much, right, like a European feel. And
Yeah.
so I was like, I'm like, one of these days when I just need to like clear my head, right? Maybe I'll take my laptop and, spend the day there and eat like, get some chocolate for lunch and some coffee. But it's, you can feel that while you're in there, no one's rushing, right? There's people available to help you. The product, going back to what you said, right? The product is very well curated. It's interesting, right? There's some history, right? They have a lot of kind of vintage, luxury couture. And it's one of those, like, you could see if first of all, for tourists, absolutely it's a stop. But secondly, right, being a resident, that is a format that works, and seeing how that kind of concept probably starts to grow more in the US and other, and elsewhere, I think is really interesting. And
I
obviously,
mean, it's important because that builds, I mean, it sounds obvious when you say it out loud, but that builds, that brand loyalty. I mean, now you're going to be, I had a really good experience there. They didn't say they wanted me to buy something this time, but I had such a good experience there. I'm going to be wanting to come back. That visit frequency is there. Obviously that's from that idea that you hire knowledgeable associates. That's critical. Just getting, that experience there. I think that kind of exemplifies a lot of the themes we've talked about today.
exactly. All right. Consumer behavior shifts. There's a lot
Yeah,
of
so we'll go through this, and and we've talked about some of this too, so we don't have to spend as much time on that. But one of the things that we've seen is that again, people are shopping more locations than before. It maybe is not to the same extent that we saw in 2024, but we do see people continue to shop around. The left-hand side just shows you the percentage of people who shopped these brands, but then also shopped Trader Joe's at least 3 times per quarter, and that number has gone up. But I think the right hand side of this slide is pretty interesting too, and I think this kind of reveals a lot about where consumers' heads are at. So these are some of the more high end department stores, and then kind of cross visitation data for Goodwill and Ross stores. That has been really interesting to see. Kind of, we're starting to see those middle to upper middle income consumers start to shop around a bit more. We've done some projects for some of the thrift stores, and the biggest area of growth for them is kind of this middle to upper middle income consumer. A lot of cases north of 150,000 in household income. Certainly a lot of cross visitation between department stores and some of the off price, particularly the treasure hunt guys as well. So kind of shows you where consumers are, and indication that consumers, while they continue to go to the high end locations, they're starting to mix up things too to kind of stretch that discretionary budget.
Yeah, I do think that we're seeing, I think in the past, right, the thrift stores were just trying to get the most budget friendly location, and it didn't end up ultimately driving their top line. I think it helped with the bottom line. But now, as they're seeing, I think, a much greater demand, they are, I think, really changing many of their real estate strategies, and it's fascinating
Very
to
much
kind of
so.
see they're popping up, even for kind of drop off of goods as well.
I think what's interesting too, yeah, you're right. It helps from a brand perspective. It helps from just an engagement standpoint. They are seeking out a little bit better situated location in terms of household income, and I think that's been successful for them. It is, yeah. I think this is kind of and to your point about with all the turnover that we've seen in terms of apparel right now. I mean, we talked about apparel being a hot category. There is a pretty good linkage between apparel visits and future thrift store visits, either drop off or buying too as well. So I think that's going to continue to be a driver. And we talk about extending the cycle in apparel. This is one of those ways that's going to happen here as well.
Interesting.
Behavioral too. I mean, I guess we've talked about more of the product side, but the service and kind of overall travel, I think this has been one of those interesting things too. Is obviously we've seen a heightened focus on experiences and travel the last couple of years, but looking at the data in terms year over year, this is visitation data to airports. We see pretty much what we've seen in the retail category too. Pretty weak February, a little bit more of a rebound in March, and then kind of April being a little bit weaker here as well. So. As we kind of think about it, I think this is an area we are going to see people pull back a bit. I think it's already happening too in terms of the price of air travel and everything else. I think this is an area where we are probably going to see some pullback, and people maybe a little bit more discreet and a little bit more conservative in terms of what they're doing in travel. Maybe they shift to more local travel too. We've seen some markets that you don't typically think is your destination for tourism kind of pick up a bit this year too, as in lieu of maybe international travel. So. Curious to get your take and see if that's kind of consistent with you seeing with any of your discussions.
Uh, yes, and I think the challenges that we're seeing at Newark is going to further, degrade these numbers as well.
Yep.
So, we've done some work in the travel retail space, and I would say that, this is pretty consistent. Some of them have even said in January it was weaker than, and they all operate globally, so
Yeah.
this is not just a US phenomenon, but you know, it
And
was
the January numbers, I think, were certainly helped by the lapping last year's storms. If we had zoomed in and looked at kind of the end of January versus like that second week in January, it got weak at the end of the month pretty quickly there.
yeah, I mean it is interesting strategically where some of the mall owners outside the US are starting to think strategically about what the summer might look like for them in light of some of the changes on the global landscape. And so it's going to be interesting. I mean, I think June, July, August, I can't wait to see these now. I mean, we track, kind of air traffic, non, let's just say consumer traffic. And so that I think, I mean, and hey, you may end up needing, right, the kind of with some of the changes that are occurring, right, and maybe product being brought in closer to need, you may need some of those lanes, if you will, for
Yeah.
product. I mean, I think there's so much changing. It's like,
Yeah.
we're kind of like dancing the daffodils here on how to approach the conversation. But yeah, I think that if I were to I mean, there's a lot that we've talked about that's been very dynamic. I think this is going to be the most interesting slide the next time we talk. And we got to have the gym slide because I'm like,
I'm not taking the other side of that bet because you could be very right on that one too. Um, one of the things too is, I mean, certain markets that have seen jump a big increase in tourism right now, and it is interesting to kind of look at. It's not what you kind of consider to be your travel hotspots in a lot of cases. I mean, I'm Chicago based, and seeing a 12% increase in Chicago visits for tourism is kind of surprising, given that it was pretty much gray and cold the entire time here too. But what it does show, I think what we're
that's
seeing.
how that's how we all think of Chicago, and we all
Hey, it's the best town in the country to live in the summer and some acquired taste in the winter. That's just the way it works. That's what we deal with here. But no, it's interesting to me that we're seeing some of these markets that I wouldn't consider to be your tourist destinations with big increases. And if we take kind of the next step back and look at where the people are coming in from, it's a lot of kind of more local travel. It's a lot of people driving in. It's a lot of people from Chicago coming in from the Great Lakes area. For Texas, it's kind of surrounding states as well there, or other markets within Texas. It's kind of a lot of local travel driving that right now. And so I think that, that's another indicator that maybe, hey, people are bypassing air travel and looking at more kind of more close proximity vacations. The other interesting things that we looked at our data, and it's not every market, but we are seeing the amount of nights stayed on vacations. That has come back a bit too. That's instead of that 7-day vacation, maybe people are taking that 3-day vacation. That's another thing we see with our data. And so I think that's helped some of these markets too, is that maybe it's an increase in tourism, but they're coming in for a shorter period of time.
So it's really interesting you said that because we're starting to see data support more day trips for business.
Yep.
And so, and it, because we're trying to figure out some of the hospitality numbers. And I mean, I've always been a huge fan of the day trip, right? Don't have to bring in luggage, right? It's just, there's just so much about it that like, and like mentally, but I think that there's a lot of it that's around budgets being cut. And so it is, right, it's a way, and I have to say I mean, literally today, I'm not going to spend too much time trying to find this, but I've never had a message like this from United Airlines. I probably shouldn't be saying this, but it was like, oh, $150 round trips, right? Like get them while you can. And I was like, I went back through all my texts for like the last 10 years. That was the only one. Like, so there's something more there, right?
Yeah, I agree. I agree. I think you're right. I think this is going to be a focal point the next time we get together on this one. So let's bring it full circle here. Let's go back to kind of this idea of the malls and kind of this third place that we started out with. And I think the trend that we talked about during the the Q4 recap and Q1 look ahead, this idea that people are using malls differently than they ever have before, I think continues to play out. We showed some data earlier about it, kind of the overall visitation trends for a lot of categories in retail being down. Yet here we show mall data year over year for most. I mean, obviously February was weak, and again, that's everything. But if we kind of move to April, we're actually up for a lot of these guys again too. Not just any kind of category. I mean, outlet's been a little bit weaker here, but generally speaking, pretty consistent trends across the different mall types. And again, I think this just shows that again, people are interacting with malls much differently than they have in the past. A lot more just kind of community building there, a lot more placemaking, a lot more attractions, things like you're seeing that there. Well, part of this too, I think, open air was probably the early in terms of the investment, in terms of mixed use. Now we're starting to see both outlet and indoor kind of emulate that in a lot of ways too. And so I think that some of that we're seeing is a little bit later stage investment towards mixed use strategies for some of these other mall property types, helping to drive it. But I think this idea that malls are dead. I mean, we continue to see anything but that. Just the malls that have evolved and innovated and adopted new strategies are the ones that continue to thrive.
Well, think about though, this makes total sense to me, right? But think about the data that we just looked at, right? In terms of if you're traveling less, whether it's for personal or professional reasons, right? Like you got to get out of the house at some point.
Yeah, exactly.
But it goes, I'm going to tie it all back. See, this is what's so great is we're seeing this, this focus on, dining, whether it's quick service or sit down, whatnot in the malls. And what we're finding, another point you brought up was around local. And some of the data that we've received, I mean, it's like the local, right? Because I'll be like, who is that, right? Like you've never heard of them, and they're doing like 3x anybody else. And
Yeah,
so
yeah.
it's like this slide I think does a really great job of kind of like bringing everything full circle, right? The whole idea of the funnel. I mean, I've I've been such a huge proponent of malls, and I mean, we've never seen such high occupancy rates in my entire
No.
career.
And
I mean,
I
over
think
100%.
Yeah, no, yeah, exactly. And it's been really exciting to see. It's not one factor. It's the fact that you're changing your tenant mix, you're using and shifting towards a lot of these local and more differentiated brands. It's the idea that you're marketing the mall itself as a brand. It's some of the things that you're bringing for, short-term attractions or pop-up stores, things like that. There's not a single playbook that works for everybody, but it's been really interesting to see all these different things. And what's happening is people are staying longer. I think this has been one of the interesting things. Duration, if we compare last year to this year in terms of how long people are staying, it's pretty conclusive. I mean, people are sticking around a lot longer. And you talked about kind of this idea of, I can go into a location and sit down and not feel pressure to shop. I think we're seeing that this idea that people can go and kind of have a different experience in malls than what we traditionally thought in the past, and kind of use this as your place outside of home and work. And I think that's definitively showing up in the data. This has been a trend that's been going on, I think, really the last 12 months, but you can even maybe say it stretched back further. But the amount of time people are spending in malls is just not because they're there to shop more locations. It's there because they're getting a different experience.
Do you so if so I have a question for you. It's actually one of those things that's weighed on me. I had thought that we might see more, let's call it WeWork type as part of a mixed use. And we really haven't in the way that I thought we might, just because of certain changes that happen in the industry, if you can read between the lines. And so what are your thoughts around this idea of like live, work, play? Is it really just like live and play and no work?
It's interesting because, yeah, you're right. I mean, we have had many discussions about live, work, play as it pertains to mixed use, and I think that was really the major theme in 24 and 23. But to your point, the work part of that component, I think, has fallen out a bit of that too. And I do think that the live, play component is very much more important to this overall strategy to get people coming in. I think it kind of depends on exactly the property we're talking about here, but I do think the work part of that has been a little bit more challenged. And some of that is because now we're starting to see a lot more 4 and 5 day in the office mandates. I think that that's certainly been at least contributed to that. If we look at our return to office index, we're seeing gradual improvement both in the number of visits to office buildings, but also the number of visitors. Right now, we're at about 65% of the visits where we were pre-pandemic, but that's improved off of kind of 55, 60% of the most recent years. So we're starting to see evidence that that's happening as well. But yeah, a long way of answering your question. I do think the live play component is more important, but there certainly should be some opportunities for work. But it's also difficult too. I mean, I don't think you can use just kind of the standard rollout WeWork or kind of co-working space that you use in kind of an urban setting. I think it's kind of matched the theme of that particular property, and that's been a little bit more difficult for some players, I think, in the space.
Yep. So we've got 4 minutes for 4 slides, and I don't think we spent a minute on anything. So we're like lightning round now.
Yeah, well, a lot of it we can talk about, and we can go quickly through some of this. BMalls is one of those things that maybe not the same level of uncertainty as kind of keywords, but I think BMall is becoming a theme that people need to pay more attention to. Obviously, we talked about mixed use and what's happened at some of the open air and some of the other. A lot of that's been at A mall properties, but we're starting to see some real interesting things take place at B malls. A lot of investment, and I think that's really helping to drive longer visits, more higher household incomes into these locations, and really changing up the mix here. So I think that's going to be one of those big cycles, one of those big trends that we get together the next couple of times. We'll have more stuff to talk about in the potential B malls there.
Perfect. No, I think that makes total sense.
And then
This
this is kind of what we're seeing
I
too.
love.
Yeah, no, I mean, and this one's near and dear to me. I live about 3 minutes away from the Wayfair store in Wilmette, and it's been fascinating to see what happens, with this community. We see, when the Carson Prairie Scott closed and then the Wayfair opens, what that does in terms of, the number of people coming back, visit frequency, weekend visits. If you get anywhere near that parking lot on the weekends, it's almost impossible to find a spot at this point where people are coming from. So it's had a real positive impact on the overall community here. And, it's one of those ones that, changing up that anchor tenant right now, finding a non-traditional anchor can really do wonders for your overall tenant mix. Eden's Plaza, which is the center that this is the WS property. It's been really interesting. They've been able to attract a lot of tenants that probably wouldn't have been in that location before. So I think that, that draw, that anchor tenant that can have a big ripple effect on the overall tenant mix, I think is really something we're starting to see, particularly for some of these B properties out there as well.
Well, and I think just going back to this like idea around less traditional, I mean, so many people I know, myself included, have been to that Wayfair, and I thought it was very innovative on so many levels. But there's like this continuous curiosity about it. So I think we're going to see more of these types
Yep.
openings, and I think we're just getting started.
Yep, and the next one too is the one where we saw a Bass Pro Shop come into a location in Irvine, and it was really amazing to see what the impact on that one is. Took over I think a Walmart location in
Yep.
that, and just amazing what we saw in terms of the overall the change of the guest mix coming in on that. And I think you're exactly right. I think this whole idea of kind of anchor selection is going to be critical going forward here too, especially for some of the malls who maybe haven't been investing the same way as some of the leaders in the group right now.
Yes, I mean, I think it's interesting as we start to see, you know, what, like I said, I think this summer is going to be very interesting in terms of visits. And I do think that we're going to, continue to see, right? I mean, it's this continuous trend with potentially people doing more staycations,
Yeah.
and that, and also, right, kind of local, right, within a, let's call it 3 5 hour, kind of from home base. So I do feel very positively about, kind of traffic, et cetera, to the mall.
Yeah, I think you're right, and I think that's as we kind of get near the end here. I mean, I think that it's always fun to tie all these themes together with you, but the themes that we're kind of bringing up, this idea of differentiation and kind of third place and staycation and people staying closer to home, it's amazing to see this all play out together here. So, and I think that's going to be important. Is this period of uncertainty that we're going through right now? People are very much kind of what's happening with prices, what's happening with that. Well, at the end of the day, I mean, if you're giving something unique and giving people a reason to come into your stores that isn't price related, then it shouldn't be much of a worry. I know that's completely oversimplifying the
No.
situation, but it's really critical right now.
And I also think that the, you know, this relationship, whether it's loyalty or retail media, personalization, but this idea that the consumer feels like this is their mall, right? I think that that was like 20 years ago, we felt that. And there's been a lot of evolution, but I feel like the consumer, right, they want it, and the malls are in a position to do that. And so I really believe we're going to go through this evolution, and it, right, there will be change, but I think that we're going to see, and much of like what we've seen in, other parts of the world, like, kind of China and Brazil and whatnot. I mean, it's fascinating when you start to look at some of these trends on a global basis, and the US is probably a little bit behind in some of them, so we get to kind of have a better understanding of maybe what should be done to enjoy even more success. So I think that we've hit on so many fascinating topics. I mean, it's
Always.
we still need to get the download on the restaurant, so maybe we'll do that more in the next one.
Yeah,
But
we'll find time for that too. But it's always a pleasure to go through these topics. And thank you everybody for joining us today. It's always a pleasure. And again, if you haven't seen Placer AI in a while, we've got a lot of new features and a lot of new content that we'd be love to show you. Deborah, thank you as always. It's always a pleasure speed round and covering all these topics with you. I can't wait for the next one.
absolutely, and I will say the most frequently heard thing at ICSC and ULI was like, "Oh, can you placer that for me?"
Yeah,
So now that it's a verb, it's, I
I,
feel like
I, I hope we continue to be a verb and one that's used more and more frequently. So that's the goal. So thank you. Appreciate that.
thanks so much. Take care, everyone, and thanks, RJ. This is great as always.